Fine. Hello and welcome to Your Money, Their Hands. And this week, my guest is Jeremy Leach, the manager of the Traded Policies Fund. First of all, it's nice to meet you, Jeremy, and thank you very much for coming in. Traded policies, just explain what the investment instruments are.
Okay, well, the underlying asset is United States issue life insurance policies where the individual that took the policy no longer had a reason for it and they've sold it on. We'd buy those policies and hold them in the fund and hedge them into the appropriate currency for the investor.
So that means I've traded my policy, for example, into you at a deep discount.
Correct.
And then you wait for me to die and...
Absolutely, and when the maturity comes through, the money is returned to the fund and goes back into the liquidity. The objective really is to build a portfolio of lives, so you end up with a population sample and the fund is valued on a mortality basis. And
we're all living longer. Is that a risk for you?
It's a risk for the investors, yes, and it's one that we need to consider as a fund manager and have an actuarial model that takes that into consideration. I
noticed looking at the trust portfolio that there are different denominations, Japanese, yen, Malaysian ringgit. Just explain how that works.
Well, it's imperative for investors, particularly at the moment, to focus on their base currency and look for return in that currency. The underlying fund delivers a very smooth, predictable investment return, and from our perspective, we feel compelled to deliver that in the right currency for the investor. So we have a range of currency classes, and our currency management team hedge out the currency risk to deliver a smooth, predictable investment return in the right currency for the investor.
What about in terms of the policy itself? You look for a 9% return, that any equity investor would be happy with that, and you certainly wouldn't get it at a bank. What risk is attached to that?
Well, other than the currency risk, which we hedge out, the main issue is that in the fund we have a lot of lives, and therefore we have a population sample. And that population sample is based on the US population. So if everybody started living longer, then there is a risk that the returns in our fund would start to go down.
Would that erode the capital value? I mean, you're not absolutely wedded to the 9%. Presumably investors might have to accept a lower return.
No, it's not about capital erosion. It's about the future returns may be less than 9% per annum. So, for example, if our expectations of mortality were too positive, then we would end up with a situation where the returns in the latter years would be lower.
So it basically pays for you to take a gloomy outlook on us.
I think it is.
On life in America.
Well, you know, they've got their troubles at the moment. I think the key is that you focus on a fund with this asset class that's got a long-term track record, and the only real way to deliver alpha is by having lower investment charges within the fund itself.
Yes, I should mention that 9% you strive for is after all charges, isn't it?
Yes, it is. Yeah.
What's your biggest fear at the moment?
For the asset class or for the market?
For both, really, and how it would affect. If it's for the markets, how would it affect your fund?
Well, it's a good question. The asset class itself is completely non-correlated, which is why the appetite for the asset class has continued to rise. Our concern is that it's not a liquid asset class, and therefore it's very important to us that we manage the investment horizon of investors that come in. So we wish to avoid short-term investors into an asset class like this because, although it's a very attractive alternative to cash, delivering a 9% return, we're focusing on investment horizon of approximately 5 years on average for our investors.
That should be the average time horizon, I thought, for most equity investors as well as your fund.
We'd like to think so, but I think because you have an asset class which ultimately delivers very smooth, predictable investment returns, it can be regarded as a very useful short-term solution to cash. But it's not. It's a medium-term investment for sophisticated investors.
Jeremy Leach from the Traded Policies Fund, thank you very much indeed.
You.